Good morning, Saturday. Time is 10:19 a.m. Pacific Standard Time. The date is 5/14/2011. It's a daily chart on the Nasdaq Comp, and we called for a reversal up here. So we had 1, 2, 3, and on the fourth day we started bouncing off the daily simple 20-day moving average. And price volatility is going to increase for the whole summer. It's called price volatility, and it's here to stay. So you get the first part of the reversal, then guess what happens? Where we bounced here in volatility off the 20-day simple moving average is that the red line here is when this sells through, lots of names would be selling in the Nasdaq Comp and the Nasdaq 100. And the 10-day simple moving average is simply rolling over the weekly Nasdaq Composite. The weekly Nasdaq Composite for 2011 is very clear. The clearness of it is that back in, we called for this correction in 2011 in February. We said we were going to have a correction, and we surely did in the Nasdaq. Came all the way down here to 2,600. Now, within the correction in the Nasdaq, heavily weighted with a lot of technology stocks, from that correction there, we were long and we made a high here, and we've got a problem on the weekly chart. Is we got again another higher high in 2011, slightly up here, with the beginning weekly. Now the 10-week and the 20-week are going to be a catalyst for support levels. Just like we did over here, we sold through the 10-week and we started to fall through this 20-week. However, the next week on a Monday, we had a gap up in volatility, and it saved it on a weekly level back over here. And now we have another weekly reversal with a second sell week in play on the Nasdaq. The other thing that you want to be aware of, that the daily chart right here on the comp is the daily moving averages. So the sell through happens right here, which would cause the broader Nasdaq Comp to sell off in the Nasdaq 100. Stop market orders would start to get triggered on the daily chart. Simple technical analysis. However, SMF, look, we called the top. There's their counter trend. Here's the reversal coming back in. And you had the up day, but you had immediate daily sell through. This is how we start to validate that this high here is lower on the high with the sell down and the last high. So this is where we start to see on Monday if we sell through the daily Nasdaq, and if we do, we'll have the bear funds breaking higher, and we'll go through the bear ETFs related to Nasdaq 100. Nasdaq Comp is also in a reversal. When we sell through, part of the MMTs, the leadership stocks in the Nasdaq, are going to sell through their support levels. If we break these daily moving average levels, the public and hedge fund managers, institutional, are going to have sell programs, and that's going to support the short. And we're in the beginning of this correction, and price volatility will be both down and up, and it will increase dramatically over the summer period.